This is a video chart presentation of the relative strength index based on the Dow Jones Industrial Average. I thought we'd do something a little bit different today. We run through a lot of different indicators in charts every day. We've taken a look at different patterns. And I thought today we'd take a closer look at something that we always try and emphasize, and that's the RSI holding above 50 as a bullish signal and dips below 50 as a bearish signal. So today I've skinnied this chart down. It's a 9-month look at the Dow and just the candles and just the relative strength index using the 7, 14, and 21. Now clearly the Dow's been on a pretty nice uptrend from bottoms down around 11,200 all the way back up to pushing on multi-year highs. So I'm just going to throw a few lines across here with the main focus on the red and gold, the 14 and 21. Because they factor in more periods, they're smoothed out a little bit more, not susceptible to whipsaws quite as much as the 7 is. And what I'm mainly going to focus on is those two longer term RSIs breaking above and below 50. You can see coming off of these lows back in 2011, they both pushed back above that 50 mark. Right through here, they certainly challenged breaking through. Once again through here, you can see the little dips. Right through that area, they both broke through. And then again through here, came back up. Right there, sitting right on the 50 mark. But again, clearly right back through here, broke back down. These are all periods of making the move above and below 50. I just want to show what the price per share does and how reliable the RSI is as a typical gauge, and why we always focus on the idea of trying to break above it and trend above it. And I can see through here it's a long span of just catching a massive rise. For any trader that would only trade based on the signal from the RSI would have caught the full breadth of that run, even all the way to that point. Even all the way to this point, right around 13,000, that would have been the sell signal. Playing this area as the break back up, as the buy again, catching another nice little run through here. Sell point again as the 14 and 21 RSI break back down through 50. This would be a walk away period. And as it makes its climb back upward, again, there's the break. And this again becomes a really challenging component of it. But you can see the RSI regularly, as it trends and moves back and forth, the buy and sell signals, that indicator alone drops. Now, of course, typically we try and tie that in with several other indicators. The RSI is a gauge of momentum. On a daily basis, we pull in the MACD and things like the tricks that are gauges of trend, as well as typically the full still, which is another gauge of momentum, but it's factored a little bit differently. So when you start using those things together and start finding common grounds, a lot of times what happens is you'll start to see these signals coming into play before they actually happen. You pull all those out of the way real quick. I particularly think at a place like this is important to note when we talk about divergences. You can see the MACD was actually losing a little bit of steam there as the Dow was getting toppy right around 13,300. When it came up and made that peak again and the RSIs made higher lows, that should have been giving a signal that momentum was coming out of this play. And of course, not too long after, RSI sharp break back down through 50 and the price per share went on a pretty healthy slide. Part of technical analysis is realizing what's going on there and seeing that the price per share is meeting a static resistance point and the RSI is giving signals that the momentum is not as strong. Now, one other thing I'd like to note in this is how we draw this box on almost every chart, and it really shows, even though there are some dips, it take a pretty savvy trader to try and catch that break from there down to here and then the rise back upward. As far as the broad perspective, you can see the strength of the RSI holding above 50 and the price per share on a solid upward climb. Similarly, basically below 50 and the price per share making lower lows and lower highs. Then the general reversal once again to primarily be holding over top of 50 and higher lows and higher highs being made. It's just a very interesting fact and way of reading the RSI in combination with the price per share, and it's something that we talk about in every chart. I thought we'd just take a minute today and try and explain a little bit more why we talk about the bullishness of holding over top of 50 and the bearishness of holding below 50, and why we put so much emphasis on the relative strength index in our daily chart analysis. Perhaps this video gave a bit more explanation as to what we look for, and hopefully that will help you in your trading. But as always, it's merely my interpretation of how to use the relative strength index. Thank you for watching, and trade smart.